The Nifty is now down 280 points. The Sensex is down 960 points.
Nifty is up 270 points from the lows. Bank Nifty in the green with gains of 530 points.
I think one can write down today's session, and because it's going to go down as one of those sessions which you will look back and remember. Just amazing. I mean, resilience is one thing, but I can run out of adjectives describing what we are seeing on the screen.
It was a solid fight from the low point of the day. More than a 200-point recovery is what we saw at one point of time. The Nifty moved into the green. Unfortunately, towards the end, we did see some selling as well. But closer to around the 18,000 odd mark. The bulls, they'll take it with both hands after what we were staring at earlier today. Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track 6 hours of the trading action in just 5 top headlines. Well, first up, let's get straight to the top headlines. Subdued global cues weigh on the Wall Street equities stage a rebounded late afternoon trade on indications that the U.S. markets may recover from Tuesday's cuts, but it's not enough to extend a 4-day winning streak. The rupee reverses Tuesday's gains as higher than expected U.S. inflation sparks a global dollar rally. Ambuja Cements gains after the company informs exchanges it will consider raising funds. The move sparks speculation over its end use. Listed entity will find the joint venture between Vedanta and Foxconn. That's the word that's coming in from Anil Agarwal. He expects commercial operations to begin in 2 years. Vedanta will hold 62% stake and Foxconn will hold the remaining 38%. That's an exclusive. IT stocks take it on the chin. The Nifty IT index was down 3%. 4 out of the 5 Nifty top losers were IT stocks. Infosys, TCS, Tech Mahindra, HCL Tech, all of them down between 2 to around 5%. State Bank of India rallies 2%, crosses 5 lakh crore in terms of market capitalization for the first time ever. Morgan Stanley bets big on SBI and IndusInd Bank. Well, here's the lineup of what we have in store for you on the show. In Market Opinion, we have Saurabh Mukherjee of Marcellus Investment Managers and Arvind Sanga of Geosphere Capital Management. And the big corporate voice on the show is Vedanta's chairman, Mr. Anil Agarwal. Well, the bull showed resilience, staging a sharp recovery after an early slump. However, the Sensex and the Nifty ended the day in the red, but the losses were not steep. Banking stocks, they led the recovery with the Nifty Bank ending at the highest we've seen ever. Prashant Nair is standing by to run us through a good wrap of market action. Prashant.
Well, incredible outperformance here in India in the face of what was a very large down day in the US. US indices were down 5%. And here in India, at about 2:30 or so, the market was in the green. I mean, the Nifty did give up gains towards close and did sell off about 0.5% or so. But just consider the 5% cut overnight and this, around 0.5% cut that we've seen here. So the outperformance continues, and this is an outcome which bulls would take with absolutely both hands. Same is true with Bank Nifty. If anything, Bank Nifty actually was up the largest amount, percentage-wise, point-wise, and the rally there started much earlier. And that actually is what contributed a lot to the Nifty gains as well. I'll get to stocks in a bit. Broader markets did not do badly as well. They were down, but not out. Market breadth, again, declines outnumbered advances, but not too worrisome at all. Banking names, IndusInd Bank, State Bank of India, Kotak, Bajaj Finserv, Bajaj Finance, HDFC Bank, ICICI Bank, clean sweep there. Stocks did come off in the last 30 minutes, but these are stocks which were up on the Nifty. IT was a clear differentiator, did not really recover too much. Infosys, TCS, HCL Tech and Wipro kind of singing in tune with what the Nasdaq overnight and tech names there did. 3 to 3.5%, 4% cuts across the board. Mid-caps were under pressure in that space as well. Cement names, I just want to make a mention because of the strong rally we had. Ambuja, ACC, India Cements, all doing very, very well in trade. The question is, can the outperformance continue? In a pretty tough year so far for global markets. The Indian market is at the pole position. It's up almost 4% for the year and not very far away from all-time highs. The only thing is, after the consumer price inflation numbers, if you were expecting help from global markets, it's not as if the market here has needed help from global markets, but the case for global markets to have a big risk-on kind of a move anticipating a Goldilocks situation is not there. So a rally here has to be very much an India-specific rally. It's possible that is essentially the outcome. We've been seeing very strong flows, India-dedicated flows over the last many sessions, and it's possible it continues. But to expect help from global markets, perhaps at least in the near term, is not likely to be a good idea. Back to you.
Thanks a lot for that, Prashant. Well, market opinion, we have Saurabh Mukherjee, founder of Marcellus Investment Managers, who said that formalization of the economy is leading to well-run companies doing well. He also gives us his top sectorial bets. Let's hear him out.
This country's economy is in reasonably good shape. We are formalizing the country. As we formalize the country, the black economy is getting crunched, and well-run companies benefiting from that. So that continues to be the case. So we've bought one more stock in Little Champs, but I think the position building is continuing. So it's a healthcare-related play based in South India. Once the position building is done, I'll be happy to tell you more about that. We've also bought ICICI Bank over the last 3 or 4 months. We've gradually built a reasonably good position in ICICI Bank. Hope is not an investment strategy last time, So you can't hope to invest in a bank which doesn't deliver an ROE above 15% and hope to make money, right? If you don't deliver ROEs above 15% as a lender, it's very difficult to build shareholder value. You just struggle to stay afloat, and then one day when a COVID type instance or an economic downturn comes, you're blown out of the water. So we don't have second tier banks in our portfolio. We have HDFC Bank, Kotak Bank in consistent compounders, and in Kings of Capital we also have Axis Bank and ICICI Bank. Vis-a-vis mid-tier IT, we struggle to understand the business case for mid-tier IT companies, because mid-tier IT companies tend to be vertical specific.
And in some more opinion, Arvind Sanger, managing partner at Geosphere Capital, said that India was in a sweet spot and was in pretty good shape. Let's hear him out.
India is in a sweet spot. It has, the benefit from all the, resourcing or friendshoring or whatever term that is driving growth. India itself has a resilience after having had, multiple years of different headwinds. So Indian economy, I think, is in a good shape. And so, yes, the earnings are reflective of that. And that's one thing that I've been very clear about. Indian economic growth and Indian earnings growth is probably one of the brighter spots in the world. And so I think that, yes, we are more inclined to look at dips as a buying opportunity than panicking here. On the risk-on front, you've had risk-on for the last couple of months, and that has meant money getting allocated to emerging markets. And in terms of relative on emerging markets, India is clearly one of the best positioned. You have Brazil with an election with a lot of uncertainty, how the acceptance of that election results will go. You have Russia, which is uninvestable. You have China, which has made itself uninvestable. So you have major emerging markets which are under a cloud, and India is one of the few bright spots where earnings growth has got some legs, and you don't have some of the other risks around politics and around geopolitics. Therefore, yes, India will remain a bastion, in my opinion, of attracting foreign capital.
Well, moving to the second headline now, Ambuja Cements surged over 7% in trade to hit an all-time high on the back of news that the company's board is set to consider fundraising in a meeting on September 16th. Well, let's run you through a few of those details. So that was the big news point. Remember, overnight, this announcement came late last evening. So what is the street wanting to know? Well, they want to know the quantum. How much of money are they going to raise? Point number one. To who will they be issuing these instruments to? Whether it's equity, whether it's convertible instruments as well. So we'll have to wait by for that. What do they want this money for? Because keep in mind, they're already sitting on a good amount of cash balance, whether it's a standalone or on a consolidated basis. So in all probability, it appears that with that money that they have, close to under $1 billion, more than $1 billion on a consolidated basis, do they have some big organic growth plans in store? Why is the street enthused, though, about both these two companies in the last few days? New promoters come in there. They're expecting some aggressive moves. the cost savings is likely to play out. Remember, on a cost per ton basis, Ambuja Cements, the cost per ton is 200 rupees more than Shree or Ultratech Cement. And the third factor is at some point of time, there could be a merger between both these two, creates a far larger entity, gets higher multiples as well, and there could be some synergy benefits as well. Why were the other cement stocks up and about? Well, the entire space was flying away, whether it was India Cements, Sanghi Cements, all of them were up and about because the street is saying that maybe there could be some potential consolidation. You even had Dalmia as well as JK Cement, both of them were up. So M&A action is likely to pick up. There could be some consolidation. If there is some consolidation, there'll be pricing stability. If that is the case, there'll be profitability as well. So it explains why the entire cement pack was on fire. Moving to the third headline today then. Vedanta was the other one. That one was up more than 7 to around 9% in trade after the company's chairman, Mr. Anil Agarwal, told CNBC-TV18 that the listed entity will fund the joint venture between Vedanta and Foxconn. The two companies will come together to manufacture semiconductors in Gujarat. Vedanta will hold 62% stake in the joint venture. Foxconn will hold the remaining 32%. He also added that commercial operations will begin in a couple of years. Let's hear him out.
Will any funding for this joint venture come from the listed entity, from Vedanta?
Yes, it will be part of Vedanta Limited, and this is the part of Vedanta Indian company, which will be one of the subsidiary, will be executing this project.
So could you give us some estimate of the kind of funding that will come from the listed entity, sir, for this project to be taken forward?
Yes, and the debt will come, equity will come from this, and debt we will take from the market.
When will we move closer to starting the work on the ground now that the decision has been made in terms of Gujarat being the location? What about any further approvals that are required both from the central government to ensure that you can get started? What are the timelines that we're looking at?
All the approvals are in place and they all are doing the final thing, but parallelly we are looking 2 years' time that we should have the product to be out in the market.
Well, time to slip into a short break, but before we go, here's some more expert opinion, what we got during the course of the day.
That India's, again, you look at the BRICS, right? South Africa is sort of a disaster. Russia's a catastrophe with this defeat last weekend. Brazil is a disaster with a very uncertain election outcome. And China is increasingly being chased away from international markets and is itself retreating. So India is a decent option here in terms of what used to be called BRICS.
Welcome back. Well, let's get straight to the fourth headline today. IT stocks, well, they took it on the chin with the Nifty IT index down closer around 3%. In fact, stocks like Infosys, TCS and Tech Mahindra, they were down anything between 2 to around 5%. That's not all. Negative commentary from Goldman Sachs in the recent report didn't help the sector as well. Nimesh Shah is with us to run us through the key highlights of that particular report. Nimesh?
Today's standout is on the IT names, and coincidentally, on a day when Nasdaq was down 5% last night, Goldman Sachs has gone ahead and downgraded the top Indian IT names, largely on back of still high valuations, and they're not factoring in the down cycle ahead. So they've downgraded TCS, Infosys, and Tech Mahindra to sell from buy, and the only upgrade is to Wipro to buy from earlier sell. Now they believe that the US dollar revenue growth will start to materially slow down from here. So Goldman Sachs has cut the dollar revenue forecast of the top 5 Indian companies by 4% to 6% now versus their earlier estimate of 10%. I mean, all this within this backdrop, they believe that the PE multiples are still very high and not sustainable. So coming to individual names, on Infosys, they've downgraded the stock to sell now from buy. They've cut the target price sharply to 12.24 versus the earlier target price of 17.22. They've also cut the EPS estimates between FY23 and FY26 by 6%. On TCS, they've downgraded to sell now. They've cut the target price sharply there to 2611 versus the earlier target price of 3678. Even for TCS, they've cut the FY23, FY26 EPS estimates by 5%. On Tech Mahindra, again, downgrade to sell, but they had a neutral earlier, and they've got the target price to 686. The only change is Wipro, where they've upgraded the stock to a buy from sell. Again, the target price is 381. The upgrade on Wipro is purely on valuations. Otherwise, even on Wipro, they've cut marginally. They've cut the EPS as well. The big thing is they've downgraded the top 3 Indian IT names today to sell from buy, and they've sharply cut the target price and the EPS estimates as well.
Thanks a lot for that, Nimesh. Well, that brings us to the fifth headline today. State Bank of India was up closer on 2%. The company crossed market capitalization of 5 lakh crore for the first time ever. Meanwhile, Morgan Stanley has bet big on a couple of banks. That's SBI and IndusInd Bank. Abhishek Kothari joins us to fill us in with more details on that. Abhishek?
Well, Morgan Stanley had its conference wherein, they had SBI as well as IndusInd Bank management coming over there. So to start with SBI, they have an overweight rating with a target price of 675 per share. The key takeaway is that the loan growth momentum is expected to remain strong, and SBI expects margins to improve from here on onwards, given the fact that Q2 FY23 margins will start showing improvement. So asset quality remains benign, and digital initiatives are gaining strong traction. So in terms of operating efficiency or cost to income ratio, they expect that to moderate over the next 2 years. Morgan Stanley is also written on IndusInd Bank, wherein they have an overweight rating and a target price of 1,400 per share. The key takeaway from management, in their conference is that growth visibility continues to improve. The deposit traction is coming back. So IndusInd is targeting deposit growth of 18 to 20%, led by strong traction that they are seeing in their new initiative. Margins should remain stable despite a rising interest rate scenario. Slippages or formation of bad loans, that should moderate, and that would help in keeping the credit cost under control. That is around 120 to 150 basis points. Back to you.
Thanks a lot for that, Abhishek. Well, the National Logistics Policy 2022 that aims to lower logistic costs to global standards is set to be released soon. The policy expects to help India rank among the top 25 nations on the logistics performance. Parikshit Luthra is with us to fill us in with more on that. Parikshit?
Well, yes, the National Logistics Policy has been under work since 2019. The government has been aiming to bring down the cost of logistics from 14% to 8%. And this, we believe, will be in that direction. what this policy would do. It has 3 specific targets: to reduce cost of logistics in line with global benchmarks by 2030. They also want India to be among the top 25 nations in terms of logistics performance index ranking, creating a data-driven support mechanism for efficiency in logistics. The National Logistics Policy 2022 will create a single point of reference for all logistics and trade facilitation. It also envisages promoting development of multimodal interconnected infrastructure, standardization of physical assets, benchmarking service levels, and harmonization of documentation. The policy aims to provide for an integrated digital logistics system, and it will essentially be a comprehensive framework which will cover all subsectors of the logistics sector, make sure that nobody works in their own separate ways. There will be an empowered group of secretaries under the PM Gati Shakti program, which will monitor the implementation of the National Logistics Policy, and there will be a service improvement group as well. No financial implications of the NLP, expenditure to be incurred by different ministries in line with existing procedures.
Thanks a lot for that, Parikshit. Clearly, logistics stocks ahead on the back of that news. Well, Siemens as well was up close to 2%. The company is focusing on strong capex cycle playing out here in India. At the India Innovation Day event held in Mumbai, Siemens said that they expect strong traction in roads, renewables, railways, and process industries. Vahista is joining us to run us through the key takeaways. Vahista?
Siemens had held an Innovation Day 2022 meet yesterday where the company has emphasized on the strong capex cycle which is playing out in India at present. Also, with a high capacity utilization across industries in India, the company expects a strong traction in roads, railways, process industries, etc. 2 months ago, Siemens had launched their open digital business platform which was called Siemens Accelerator, which finds its application across industries, which is in grids, in transportation, in building segments, and company has also said that India will continue to be a critical market for the company as a whole. Siemens is aiming to target the SME segment henceforth, which will allow it to scale up and add up new designs and components into their product portfolio. The energy landscape is actually changing faster than they had anticipated and is leading the increased decarbonization in the country. Now, some of the key growth drivers for Siemens could possibly be the favorable government regulations for localization of data. There's an exponential growth in the digital communication and the launch of 5G services. However, there could also be some risks for the stock, which is a slowdown in capex and a slowdown in the research and development spending towards automation and digitization.
We're talking about black swan events having hit us almost every month in the last couple of years. And how do you develop and create a resilient organization, a reliable organization, at the same time using flexibility?
2 months ago, we launched what we called Siemens Accelerator. And what is great about it is that India has a major part in it, and I will explain a little bit to you why that is the case. So why did we launch Siemens Accelerator? Our customers that we serve across infrastructure, industries, mobility, energy, they all are saying that not only do they need to be more productive, they need to provide better quality, but they now have to become resilient and they have to become more sustainable.
Well, moving on to the auto sector now, Maruti Suzuki is upbeat about its strong booking trend ahead of the festive season. The company's executive director, Shashank Srivastav, told CNBC-TV18 that they are anticipating strong season provided that the production is as per demand. The company has over 4 lakh pending bookings. Let's listen in.
We have seen a strong booking trend so far, and going forward in the festive season, I expect the festive season to be strong, provided, of course, that we are able to produce vehicles according to the underlying demand pattern. There is a lot of pending bookings at the OEMs across the industry and also at Maruti Suzuki. We have about 425,000 bookings which are pending. So I expect the season to be strong.
Well, Indian retailers are seeing strong sales growth across categories, with August sales rising 15% over pre-COVID levels. However, the Retailers Association of India still sees inflation as a bit of a pressure point.
till the month of July, we had seen that buying was happening across all price points, and that was very encouraging. I wouldn't call it revenge buying, I'd call it a cheer buying. There was always this worry of inflation. In the month of August, we've seen that the sales for the lower price point, the entry price point across categories, be it garments, footwear, like what Nilesh said about electronics, I think everywhere there has been a pause.
Well, on that note, we'll wrap up on this edition of Markets Today. Thanks so much for watching.